Today, I'm going to bring you 5 stocks priced under $20 a share that I think are opportunities to buy at these levels and lower. Before I do that, I have a few things I want to communicate to the channel and really get off my chest. So the most important part of this video is the very front right here. If you want to learn anything about investing in the stock market, keep watching. It can be really frustrating being a YouTuber creating content about the stock market, because here's the reality, and I've been doing YouTube for almost 4 years, and I'm starting to figure it out. First, when you think of investing, the average hold time went from 6 years to less than 6 months. Whether it's CNBC, social media, pretty much anything has an agenda, and they're really thinking about 6 months and really not 6 years. You see, there really aren't many investors really left out there, especially when you look at a platform like YouTube. Now, of course, there are exceptions, and I will explain, but really, when you think about YouTube, people are going to be here for 2 primary reasons. What stock should I buy today? At what price? When should I sell it to make a quick buck? I want instant gratification. Second, I've already bought a stock and I'm here for confirmation bias. I want you to tell me that I picked the right stock and that I'm smart and that I shouldn't sell what I already own. That's generally what videos on YouTube about stocks are watched for. And I can see the stats of where people fast forward. They'll go right to the stock pick, listen for 10 seconds, and then skip to the next. And the reality is, I can't stop you from doing that. So if you're one of those people that are not here to learn, feel free to skip throughout the video. Have at it. For those that do want to learn and understand investing, when you think about the stock market as a whole, it's very cyclical. And unfortunately, when you think of retail investors, there's this rinse and repeat life cycle that happens. Essentially, retail comes in at tops. They come when everybody's really excited. They buy the most expensive prices. Then things plummet, fall off a cliff, and they sell those lows. So buy high and sell low. And then they kind of take their ball, they go home, and they don't come back. Most of them don't come back ever. Some of them come back, but it takes years. Generally, the market's waiting for a new cycle and really, unfortunately, fresh meat, fresh blood to go after and do the same life cycle, rinse and repeat, taking money from people that don't have money, rich get richer. So you look at 2022, we were talking about buying stocks like Nvidia and Tesla, and we got lots of heat for it on the channel. Like, they're going a lot lower. You shouldn't buy them here. They're not in fashion. Well, Nvidia went from $108 to what, $270 or something a share today. And of course, everybody wants to buy it now that it's $270. But when it was $150 or less and we were pounding the table, it's that fear of losing everything or full. It's going to go lower. It's going to go lower. Don't buy now. Wait. And you heard things like Nvidia is going to $50. Nvidia is going to $80. I'm not touching Tesla till it gets to $80. There's a gap fill there on the chart. Well, of course, it didn't get to those prices, and those people didn't buy anything, and they're still complaining about how they're too expensive, and they're perma bears out there trying to get the stock to get back to those levels because that's what they want to buy. So everybody's got their agenda. Everybody's got cycles. And out of 35,000 subscribers here on YouTube, less than 1,000 of those, 900 and some, are in our Discord server. And they're what I call aliens. We're investing aliens. Why? We're a unique species. Really, we're unique specimens that like to invest in stocks, talk about the stock market and personal finance. The vast majority of the population doesn't care about investing. The ones that do, 90% of them are focused on short-term instant gratification, and they're not really long-term investors. They either think they are, or they just will tell you admittedly that they're not, and they're here to get a quick stock idea and move on to the next channel. So of course, I'm happy to have all views here, and every view and subscriber matters. So regardless of why you're here, but definitely understand, YouTube in general, I can go out, if I want to get more views, what do I have to do? Right now, I could talk about a recession and have the dramatic thumbnail with blood all over my face or whatever. I could talk about buy this stock today, you'll be a millionaire tomorrow. Buy and hold these stocks forever. The taglines that get your attention to click videos. I generally don't do that. I stay away from the clickbait, try to keep it real. And I'm here really because I want to educate you to be a better investor. And I realize that not everybody wants that help. So next I'm going to get into my 5 stock picks, but I wanted to get that off my chest. If you are here and you're serious about investing, consider joining our Patreon Discord. If not, that's okay too, because any support that we get, whether it's YouTube channel, Twitter, whatever it is, we're very appreciative of that. But understand, if you're watching this part right now, There's very few people, less than 10% are still watching at this point of the video right now, which is sad, but it's fact. The majority have already skipped to the stock picks and they're probably already done with the video. But let's get into 5 stocks priced under $20. Let's go. The first stock is going to be TOST. Ticker is TOST. This is a mid cap, about a $9 billion market cap. It's trading right now just under $17.50 a share. Now the 52-week range, this was up to 2604. It got down to 1191 on the 52-week low. That was on May 12th, 2022. So if you're not familiar with TOST, you can see on your screen here, manage orders, take online ordering, prep and serve. They've got dine and pay, manage and grow. So this is going to be a platform that really helps you from start to finish, A to Z for restaurants. So this is a tough business to put a value on because it's a blend. It has some software as a service, it has transactional volume, it has hardware. So their hardware is generally sold at a loss. Unfortunately, that was only 4% of revenue in 2022. Their largest source of revenue comes from the fintech, and that's going to be transactional based. And that's about 83% of their revenue. So this will charge you a fee per transaction as well as a micro percentage on every one of those transactions. Of course, that's a low margin segment. And when you look at the gross profit margin for 2022, fintech was around 21%. The most attractive part of TOST business is going to be that software as a service side. That had 65% gross margin in 2022. The bad news is it's only about 12% of the company's revenue. But with that said, this segment of the business grew 92% in 2022, so it's up and coming. And the stock has recovered nicely since that news started to improve. Just a quick snapshot of 2022 highlights. You can see 59% year-over-year growth on ARR, that's annual recurring revenue, 118% annual net retention rate, which is strong. And then that revenue grew by about 60% year-over-year. In total locations, over 79,000, that's growth of 40%. And the global TAM is over $110 billion. And right now, I mean, they're not even touching the tip of the iceberg. You think of US TAM, it's $55 billion. So I think TOST could be a good long-term prospect. It's really kind of a duopoly with Olo and TOST. Check out TOST, ticker is TOST. Up next is UiPath. Think robotic process automation and AI. Now this was once an $80 stock back in 2021. Of course, it was way ahead of itself. It's much more reasonable now, around $16 a share. It's a mid cap, another one about $9.2 billion. So both TOST and Path are about $9 billion market caps. Of course, both of these companies are not profitable yet. They're burning cash to grow and they're not in fashion. But as I said in the beginning, you want to buy things when they're not in fashion, not when everybody else wants to buy them. If you're not familiar with UiPath, essentially it's going to help you automate your business with those mundane tasks, that data entry, things like that, getting rid of that, automating that so that your employees can focus on more important things. The third stock on the list is SentinelOne, ticker is S, and it's endpoint cybersecurity, so it competes with companies like CrowdStrike and Microsoft. This is a small cap, less than $5 billion, and I do think it's attractive, especially closer to $15 a share for long-term investors. This is their 2022 shareholder letter, and you can read some of this, but the growth has been pretty impressive. Now, this is more focused on SMB, small and mid-sized businesses, and of course, those are more at risk when you think of recessionary fears. So I think this is the time to buy SentinelOne, not when it was at its all-time highs in 2021. I think you accumulate around these price levels thinking 5 years out. Now, all these stocks could certainly go lower, but again, I'm thinking at attractive price points where I can accumulate shares, dollar cost average, and think 3, 5, 7 years out. Some of their quick highlights when you think of FY 2023. Revenue grew by 106%, $422 million compared to $205 million in fiscal year 2022. Gross margin 66% compared to 60% in fiscal year 2022. Non-GAAP was 72%. You can see impressive numbers here. So this is year-over-year revenue growth in millions. 100% growth, 120%, and 106%. So it's one of those things where it's not going to be able to keep that pace forever, but it's still growing at a 100% clip. So with SaaS companies, software as a service, you're looking at something like an EV NTM revenue, okay? So SentinelOne trades at a 7.2x with that metric. Now this is burning cash. It has negative free cash flow. It's about 50%, and they're spending a lot of money on R&D, so there's certainly risk with SentinelOne. Net dollar retention for SentinelOne is about 132%. And the rule of 40, because of that cash burn, is only 42%. Of course, you want that 40% or higher. higher. So going back to UiPath, that's also a negative free cash flow of about 3% negative. And UiPath trades around 6.1x for that EV NTM revenue. Now TOST is only a 2.3x EV NTM revenue, but it's because it has that blended model that I discussed, and it's harder to put that premium on it. And TOST also has negative free cash flow, negative 7%. TOST rule of 40, 52%. Now I've got two more stocks to cover. Before I go on, I need to announce this video is sponsored by the Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. A reminder, they do not tell me what to make, what videos to create. They're a great partner and they allow me to bring content like this to you for free on YouTube. You can also check out our private community at patreon.com/firedupwealth. The fourth stock is going to be a micro cap trading around $10 a share. And I interviewed the CEO of this company on the channel, and I encourage you to go watch that.
I began my career back at Advanced Micro Devices, AMD.
Yep.
We were competing against Intel. We were an IDM, integrated device manufacturer, so we had our own fabs. I was in the manufacturing side, so I began my life in this industry in the fab and spent literally the next couple of decades competing with Intel, really learning the importance of thinking differently when you're going up against much bigger competitors.
So SkyWater Technology, it's a US-based foundry. It's a micro cap, $447 million market cap. Also looking to grow their revenues from about $200 million to $1 billion over the next 5 to 7 years. So this could be a 5x stock, but it's going to be a long-term investment. You're going to be holding it probably till 2030. And this stock certainly could go lower. Check out other videos on the channel that cover SkyWater Technology. There's a lot more due diligence on the channel about this stock. And next, I'm going to cover the fifth stock. Make sure you guys subscribe to the channel. Click that bell for notifications and drop me a like and comment if this was helpful. Number 5 is going to be SoFi. And I just did a deep dive on this stock just a couple weeks ago. Go check that one out. It has a lot of great information about SoFi and why the stock has been down. This is a small cap, $5.5 billion. Another one that's not profitable, trading at very reasonable valuations, around 1 price to book. I like this stock, especially closer to $5 a share, but even under $6, I think long term, it's a good opportunity. And all these stocks have risk reward. You could consider most of these speculative, meaning they can give you a 10x return or a 0. So manage your risk appropriately and do what's best for you. I appreciate your time and attention. Have a great rest of your day. Take care.